Nike falling 5% today, the worst performer in the Dow, on the heels of last night's earnings report here on Overtime, where it warned about a drop in sales as tariffs and consumer confidence fuel uncertainty in retail. With Lululemon set to report next week, let's get the read on retail and the consumer with Simeon Siegel, managing director at BMO. Simeon, happy Friday. Good to see you. Is Nike management just kitchen sinking it here? Uncertain macro, maybe trying to protect the credibility of a new CEO?
That would be nice. I think, hey, John, good to see you. I think the uncertainty word, I think that's the word, and I think that's true across retail. We'll see it with Lulu. We've seen it for the last several weeks. I think if you and I were able to say this was it, we have the light at the end of the tunnel, I think Nike would have closed up higher. I think that right now there was a lot of hope. I think there's still a little bit of confusion. I think once we can create clarity, that's when you'll see people jump in.
What's the likelihood that we get a similar message from Lululemon?
So, different scenarios. As you say, it's a new CEO. We have a problem of overextension. Lulu right now is still questioning right now, are they in growth mode or are they not? And so I think what happens with Lulu is there's product conversations, there's competitive conversations. And I think what you and I are going to find out increasingly each quarter is where do they fit on that maturity curve? International should be fine. The question is going to be the difference between, and it's going to sound silly, for North America, for America, the difference between a positive 1% to 2% growth and a negative could actually have severe ramifications. And so there's general negativity around Lululemon right now, not because the brand isn't a strong brand, but because perhaps it's overextended and we're going to find out that there's room to give back.
How much of this is a reflection on the state of the consumer, particularly here in the U.S., versus the fact that there's just a lot more competition in the market, especially when you're talking about something like athleisure?
So, Morgan, I think it's a great question. I think that the reality is if we were to rewind and say, okay, we're talking about Q4 earnings right now, which sounds funny and backwards looking, but that's what it was. And so if we were to look back at the Q4 earnings reporters, everyone feels like they were disastrous. Because if you look at the market has been disastrous. Most holiday reporters actually were good. Most holiday reporters saw revenue grow. They saw margin grow. It was the guidance. It was this macro uncertainty. It was the thoughts of caution for the future that got people all concerned, not the actual spending. And so I think that the U.S. consumer, clearly there's delineation, clearly there's different areas, but I think maybe they're getting a little bit worse than they actually are when I think we're framing them worse than they actually are. People are still spending. Now they're choosing where to spend, and there's winners and losers instead of like rising tide lifting all boats. But we're finding in every subsector there's a winner and there's a loser, and that's not an unhealthy thing. That's market share.
It's also interesting, and you're touching on it, and we saw it even this week with some of the names that reported, whether it was Nike last night or Five Below the day before, the fact that a lot of these retailers and apparel brands are factoring in possible tariff impacts, and we don't actually know how any of that's going to play out either. So there could be potentially room for upside surprise, potentially. So in light of that, and in light of what you're saying, what would you be buying right now?
So I think the question now is how dirty are you willing to get? So do we want something comfortable? Do we want a TJX where we need to spend up, but we know that there's not going to be a whole lot of surprise factor and that you're just comfortable, sleep easy at night? That's bucket number one. So that's kind of my right side of the barbell or left side of the barbell, whichever way the screen shows me on. The other side, the dirtier side, the more interesting side, perhaps, would be Capri. And you and I have talked about this one in the past. What's so fascinating to me about Capri, which owns Michael Kors, Versace, and Jimmy Choo right now, is there's a market cap of around $2.5 billion and net debt of around 1.1. They are talking about potentially, or they are not, the media is talking about potentially them monetizing Versace and or Jimmy Choo, which could solve this net debt problem immediately. But even if they don't, Michael Kors generates a lot of cash. I think there's a really interesting dynamic where you look at the Michael Kors business, which looks like it's been underperforming and tied into all of the macro conversations we're having now, but you layer that in with a balance sheet opportunity that makes the stock particularly interesting. And so in a world where the sun comes out and people are willing to bid again, I think there's a lot in retail that has seen meaningful collapse that then people might get a little bit more comfortable. And so that's digging a little bit more in the dislocation versus the TJX, which is the comfortable, safe place.
Okay, so that goes to maybe put a finer point on that. Are you saying the mainstream consumer, if you're taking a flyer, that's a stock that you would pick for the mainstream as opposed to high luxury or a discounter?
Sure, I mean, that's where they fit. I think the beauty of this is there's winners in luxury, there's losers in luxury, there's winners in both of these areas, and there's revenue growers. And so for me, I'm thinking about this in the context of retailers that have fallen, retailers that have a compelling valuation with a really interesting balance sheet kicker. If the fact that I've got almost half of my market cap in net debt means my enterprise value is too high, that will be fixed. That'll create interesting stock market opportunity. If I just look across where are the retailers that have gotten knocked down, Michael Kors is absolutely one of them. And very much to your point, that is not when we talk about ultra luxury. So appealing to a different consumer.